Welcome to the deep dive. Today, we're cutting through the noise to explore a company that's literally redefining surgery, Intuitive Surgical, or ISRG.
That's right.
We're going to unearth the most important insights from its recent technical charts, fundamental health, and some breaking news as well.
Yeah.
Our mission here is to help you really understand what's driving this stock right now. It feels like this company sits at a truly unique crossroads of technology and vital healthcare advancements, doesn't it?
It absolutely does. And that unique position makes ISRG a particularly compelling subject to analyze. We're looking at a fascinating intersection where cutting-edge innovation meets the incredibly important and often complex world of medical practice.
Yeah.
There are layers of insights here for anyone looking to understand where technology and market forces converge.
I couldn't agree more. So let's start where many investment journeys begin, with the charts. Can you maybe paint a picture of ISRG's long-term technical story? What's the narrative the monthly time frame is telling us?
Sure. If we look at the bigger picture, on the monthly time frame, ISRG has shown remarkable consistency. Since December 2007, believe it or not, the stock has been trading within a clear ascending wedge pattern.
Wow, since 2007.
Yeah, long term. And this isn't just a random squiggle. It signifies a really strong, persistent, long-term bullish trend. You see the consistent formation of higher highs and higher lows.
Classic bullish sign.
Exactly.
Okay.
And the price is sitting comfortably above its key 50-period exponential moving average. The EMA, a classic indicator that its long-term bullish power is, fully intact. Right now, it's trading around $544.
Okay.
And it's respecting both the upper and lower boundaries of that wedge, maintaining a pretty well-defined channel.
That consistent upward trend sounds almost too good to be true for long-term investors. Is there any nuance or a counter signal we should be aware of on that monthly chart? What's the subtle warning sign maybe hiding there?
There is indeed, and this is where it gets critical, I think, for long-term holders. While the price action itself is undeniably strong, the monthly relative strength index, or RSI, is showing strong bearish divergence.
Ah, okay. Explain that divergence.
So basically it means that while the price has been making those higher highs,
Yep.
the strength or momentum behind those upward moves, as measured by the RSI, is actually weakening beneath the surface. It hasn't been making corresponding higher highs.
Interesting. So less oomph behind the recent peaks.
Pretty much. So while the price looks strong on the surface, that RSI divergence is essentially telling us the engine might be sputtering a bit beneath the hood. It's a critical warning sign not to get complacent,
That's a crucial distinction. So with that long-term view in mind, particularly that cautionary flag from the RSI, let's zoom in a bit. What further insights does the weekly chart provide, especially after that bearish divergence signal?
Okay, moving to the weekly. On the weekly time frame, the bullish structure is reinforced. ISRG also trades above its 50 EMA here, which is certainly a positive sign.
Okay, still bullish then.
Still bullish overall. But what's particularly significant and actually quite reassuring is what happened back in April 2025.
What was that?
The stock successfully retested a previous demand zone. Think of it as a price level where buyers previously stepped in with significant force.
Like a support level people were watching.
Exactly. This particular zone was between roughly $415 and $450, and it originated back in July 2024.
Right.
What emerged from that retest was a powerful bullish rejection candle. And importantly, it was supported by ultra-high volume.
Okay, break that down. Bullish rejection, high volume.
It's basically a strong signal that buyers decisively push the price back up from that key support level. Like hitting a trampoline, you could say.
Oh, okay.
It indicates the bulls are firmly regaining control, and the uptrend could very well be set to resume from here. That volume confirms the conviction.
It sounds like ISRG is a story of long-term strength, with maybe a subtle cautionary note from the RSI, but now reinforced by renewed bullish strength after a key weekly retest. So what does this all mean for someone looking at the immediate horizon? What's the daily chart telling us to watch out for right now?
Good question. Looking at the daily time frame, we anticipate ISRG will likely retest its previous all-time high. That's near the $616 mark.
Okay, aiming for the peak then.
Yeah. And if the current momentum continues, it's quite possible we could see it reach the upper trend line of that long-term wedge we mentioned, maybe around $650 in the coming weeks.
So potential upside there.
Definitely potential. However, there's an important alert for short-term considerations. If the stock breaks and closes decisively below the $500 level, that would signal a potential short-term correction, likely towards the $480 level. So $500 is a key line in the sand right now.
Got it. Watch $500.
Right. As of now, the stock is definitely trading within an ascending pattern, with a high probability of aiming for either that $616 resistance zone or perhaps even that higher time frame, wedge's upper boundary near $650.
Okay, that gives us a really clear picture of the technical landscape. We mapped out the market's pulse with those charts, but, to truly understand ISRG, we need to look under the hood at the engine driving those numbers.
Absolutely, the fundamentals.
Exactly. What does ISRG's core business tell us about its fundamental strength? Let's say as of early July 2025. What makes this company tick financially?
Right, and from a fundamental perspective, ISRG presents a very, very robust picture. Let's start with their balance sheet strength. It's quite impressive.
Oh, so?
Their debt-to-equity ratio is exceptionally low. We're talking approximately 0.12 times as of Q1 2025.
Wow, very little debt.
Minimal financial leverage. Many would call it a fortress balance sheet. It's built on solid rock, not sand.
A fortress balance sheet. I like that.
Yeah. And their current ratio also remains healthy, greater than 1, which reflects ample short-term liquidity. This isn't surprising given their significant cash reserves. They have plenty of cash on hand.
That really paints a picture of financial rock solidity. But in a fast-paced, innovative sector like robotic surgery, does having such a fortress balance sheet maybe mean they might be holding back on aggressive expansion or acquisitions? Or is it purely a strength that gives them agility?
That's a fair question. I'd say it's primarily a strength that offers immense strategic flexibility.
Okay.
It means they're not beholden to creditors, right? They have the capital to invest heavily in R&D, which is crucial in their field, or pursue potential acquisitions or strategic partnerships when opportunities arise, all without taking on excessive risk.
Makes sense. Flexibility is key.
Definitely. And speaking of strength, their growth story is compelling. ISRG has shown consistent revenue expansion. Look at the numbers. Growing from about $7.12 billion in 2023 to approximately $8.35 billion in 2024.
Solid growth there.
Very solid. Their margin performance is also remarkably strong, especially given their dominant position in the robotic surgery niche. Net income reached around $2.6 billion in 2024.
Profitable, clearly.
Very profitable. And when we look at free cash flow, which is a critical metric for a company's financial health,
always important.
It was exceptionally robust, over $1.3 billion in 2024. That demonstrates ISRG's strong ability to generate cash purely from its operations. Earlier periods saw around $465 million. So that highlights a significant jump recently.
So a company with minimal debt, strong liquidity, consistent revenue growth, impressive net income, and robust free cash flow, that really does paint a picture of a fundamentally powerful business.
It really does.
All these strong fundamentals sound incredible, but as we often find with market leaders, true strength often comes at a price. And that leads us directly to the elephant in the room for ISRG, its valuation.
You've hit on the critical point.
Yeah.
Absolutely. While the operational numbers are stellar, the valuation picture is far more complex.
Yee.
It's complex.
So what are we seeing?
Well, intrinsic value estimates, for instance, they vary quite widely depending on the model and assumptions. One source we looked at, Alpha Spread, pegs it at about $166.54 under their base case discounted cash flow assumptions.
Oh, wait, $166 when the stock's trading around $544?
Exactly. That's a huge gap. This suggests, according to that analysis at least, significant overvaluation at current prices.
That's not just a little stretch, that's a lot.
It is. And this isn't just a high number compared to the current price. It means the market is pricing in like near perfection.
Right.
Any slight wobble in growth, maybe delayed product launch or increased competition, and that premium could vanish quickly. It creates a very limited margin for error for new investors at these levels.
That's a massive difference. Alpha Spread suggesting the stock is trading at more than triple its estimated intrinsic value. Is this kind of divergence common for high-growth tech companies, or does it point to a unique risk for ISRG specifically?
Well, it's common for high-growth disruptors in innovative fields to trade at a premium, certainly. Investors anticipate future earnings power, right?
Sure, pricing in the future.
But ISRG's price to earnings, or PE ratio, is approximately 77 times its trailing 12 months earnings. 77.
Oof.
Yeah. Now, when you compare that to sector medians, which are typically around, say, 25 to 30 times,
Big difference.
it's clear ISRG trades at a very significant premium. Now, this premium is arguably justified by its strong growth expectations and dominant market position.
Okay.
But it implies you're essentially betting on flawless execution and continued exponential growth. What happens if their next-gen product doesn't achieve immediate widespread adoption, or if a competitor emerges faster than expected? That's the risk baked into such a high valuation.
That makes perfect sense. High expectations mean there's less room for disappointment. But speaking of future growth, what recent news and upcoming developments could actually influence these metrics and potentially that stretched valuation in the coming months?
Right, because it's not static. There are a couple of really significant catalysts coming up and some recent developments you need to be aware of.
Okay, what are they?
First, there's the CE mark approval for their next-generation Da Vinci 5 surgical system in Europe. That was granted just recently, on July 2nd, 2025.
Ah, the Da Vinci 5. That's big news.
Huge news. This isn't just a regulatory checkbox. For investors, it signals a massive market expansion opportunity. This approval enables expanded adult and pediatric surgical applications in Europe, which is a significant step for market penetration and future revenue streams.
More markets, more procedures.
Exactly. Second, there's been a notable leadership transition. Effective July 1st, 2025, CEO Gary Guffart stepped aside to become executive chair.
Okay, shift at the top.
Yeah, Dave Rosa, who was previously president, has taken over as CEO, and Craig Barrett has become lead independent director. So, new leadership navigating this next phase.
That's a lot of moving parts. A new generation product, getting approval for a major market, plus a leadership change at the very top. Besides these, is there anything else on the immediate horizon that, our listeners should really focus on?
Absolutely. The upcoming quarterly earnings report, expected in mid-July, will be another key event to watch closely.
Really crucial.
Always. The critical question for investors will be how the market reacts to, say, the initial adoption rates of the Da Vinci 5, if they give any color on that, and how investors perceive the new leadership's immediate plans and outlook.
So guidance will be key.
Guidance, commentary, sentiment. You'll want to keep a close eye on how valuation shifts and market sentiment evolves, particularly after this CE approval and in reaction to the leadership transition. These events could significantly re-rate the stock, for better or worse.
So to sort of bring it all together for you, ISRG is undeniably a fundamentally robust business. I mean, it boasts impressive growth, strong margins, a dominant market position, all backed by that fortress balance sheet we talked about. However, its valuation is, significantly stretched.
That's the tension.
That high PE ratio, coupled with those widely divergent intrinsic value estimates, introduces a definite layer of risk and, as you said, a very limited margin for error.
Exactly. The story of ISRG is a great example, really, of the importance of balancing the excitement of technological advancement and a strong growth trajectory with a disciplined valuation analysis. It's about understanding not just what the company is doing, which is amazing, but at what price you're buying into that story.
And that leaves us with a final provocative thought for you to consider. In an era where groundbreaking technology like robotic surgery drives potentially exponential growth, how do we, as informed individuals, weigh the undeniable power of innovation against the fundamental principles of value and risk?
It's the key question.
What does the story of ISRG tell us about the future intersection of medicine, technology, and ultimately market expectations? Something to think about.
Definitely food for thought.
Thank you for joining us on this deep dive. We encourage you to continue your own exploration into these fascinating topics. We'll see you next time.